Hey guys, what's up? Alec back with the daily stock market. And look at that. In the last year, we are currently still up $37,569. Year to date, $27,000. The last 6 months, we're up $18,000, now bringing the account total to $85,893. This is only the public account, by the way, doesn't account for my private account. Right now, we have a massive movement on ticker symbol SMCI, super micro computers and AI stock down 32% after earnings. So in this video, we're definitely going to be talking about super micro computers and why they're down 32% and if they're a good buy. We're also going to be doing an earnings recap. Keep in mind, this week of earnings was one of the most eventful of the entire earnings season. Monday, we had Ford reporting. Tuesday, we had SoFi, PayPal, McDonald's, BP, Oil, Pfizer, Crocs, Royal Caribbean, JetBlue. Tuesday, after the close, we had AMD, Alphabet, Snapchat, which was up 18% on Snapchat. We had Chipotle, Visa, and then Wednesday, before the open, we have Caterpillar, which is an infrastructure type of stock. Wingstop. And then today, Wednesday, after the close, we had Microsoft reporting, Meta reporting, Coinbase, Robinhood, Etsy, Carvana, Roku, and Starbucks all reporting today after the close. But that's not even our busiest day yet, because Thursday before open, we have Uber, Peloton, MasterCard, Norwegian, Roblox, and then after the close, we have Amazon and Apple. And just those two stocks alone make up so much of the S&P 500. So those are going to be very scrutinized earnings. Obviously, today with Microsoft and Meta and Coinbase and Robinhood, it was a big deal also. And even Tuesday with Google, AMD, Snapchat, and Visa reporting. So those are our big days. Friday, it's starting to wind down with only Fubo TV, Chevron, ExxonMobil, some oil companies reporting on Friday. Now, we are going to be talking about Apple and Amazon reporting earnings coming up tomorrow, so stay tuned for that. But first, let's go over super micro computers. SMCI ticker symbol craters 30% after auditors resign. Shares of super micro computers cratered in today's trading after the AI hardware company's auditor, Ernst & Young LLP, resigned as its registered public accountant. Essentially, Ernst & Young have lost trust in SMCI's management due to information that has made it unable to rely on management and the audit committee's representations. Unsurprisingly, Super Microcomputer stated that it disagreed with this decision, especially since the special committee tasked with the investigation, the firm's accounting practices, has not finished its review. For investors who were hoping on SMCI's accounting issues being resolved, today's announcement adds a whole new layer of mistrust to the company, which is a bad thing and a very bearish thing for the stock, obviously, because that's why they were even down so much in the last 3 months or so, because of that huge issue that was going on with the accounting issue. We are hoping it was going to be resolved. This adds a whole new layer. In fact, shares have been struggling ever since short seller Hindenburg Research accused the company of accounting manipulation and other questionable practices, which included violating export bans. With today's drop, SMCI stock is now down 72% from its split adjusted peak of $122 per share. Interestingly enough, though, shares have rallied so strong for the beginning of the year to their peak that they are still up 22% on a year-to-date basis. So this is just one of those stocks that's basically high risk, high reward, okay? And just to recap, you can see they're down 53% in the past month. Year to date, they are up 17% still, like the article was saying. And that's just because they rallied so hard to $118 per share. They were up 311%. Obviously, the shares have cooled down massively, still down 71% at $32 per share. So they are a roll of the dice. Market cap is $19 billion. This is a stock that it could experience 300% gains or more just in the next 24 months or so. Obviously, there's a lot of details that need to be ironed out. So there is a lot of high risk involved with the accounting and what's going on right now. Um, that that's why the stock's down 53% in the past 3 months. We're getting a big discount right now. But if you believe in the whole AI space and you want to take a little bit of a risk, then Super Microcomputer is definitely one to be watching and have on your watch list at $32 per share. Could be a great entry point. It actually offers in analyst eyes around an 80 to 100% gain, with their share price target around $55 to $60 per share for Super Microcomputers in the next 12 months. Okay, so here's a really good article I want to share with you guys. AMD and Alphabet hit earnings target this week. Now Apple, Amazon, Microsoft, and Intel get their shots. This week marks a wave of third quarter earnings for big tech companies, as in recent quarters, infrastructure development and use of AI resources can help these companies earn Wall Street's continued support. And this article starts off by talking about AI. A stunning 25% of all the code at Alphabet is now AI generated. Alphabet, or Google, results, like its business itself, are multifaceted and complex. Focusing on its cloud division covers a lot of bases. In its third quarter, this crucial segment saw 35% growth, and it continues to drive upward in a busy, competitive hyperscaler market. This growth is rooted in AI-powered infrastructure and generative AI solutions, both for Apple's own internal usage and as a product of set of services to offer to AI developers. So this is very important for for Google, because it shows that AI will help boost the company long term and even in the short term. Even right now, 25% of the code that's being developed at Google is AI generated. And that is a stunning statistic for anyone hesitant to believe in AI could be rolled out for real world use as of today. The stock market remains bullish on Alphabet and its growth in cloud, amongst other areas. Looking ahead of the rest of the week earnings report, four tech giants stand out: Apple, Amazon, Intel, and Microsoft. Apple is looking for growth right now. Remember, they just released their iPhone 16 and their Apple Intelligence. Apple reports after finally bringing its AI features to iPhone 16 customers after months of hype, yet early tests suggest that the features do not live up to the marketing blitz. This could lead to lower sales for iPhone, which has already been reported. It's more likely that better performance from its new line of M4 PC chips will be the driver in sales, if there even is one. Additionally, Apple could face problems if it continues to lag behind competitors such as Microsoft, Samsung, and its AI implementations. Both rivals have been pushing more AI features on a wider scale, thanks to cloud-based and on-device AI processing. So overall, it is looking a little bit bearish for Apple not hitting the marks on that iPhone 16, which is going to be the big thing right now, and not really utilizing AI as much as some of these other companies like Microsoft and Google are able to. So turning to Amazon, we see Amazon turns to AWS. Earnings for Amazon also involves many divergent decisions, but from an AWS cloud hyperscaler perspective, Amazon needs to showcase its use of AI infrastructure investment and how it stands out from competing cloud giants like Google, for example. Amazon Web Services is the biggest player in the cloud computing by revenue and customer quantity, but Amazon seems to be uninterested in promoting its investments with AI, at least from a marketing point of view. If that is the strategy, it could be good or bad, depending on your view, as the company focuses on constant, dependable revenue segments rather than chasing the spotlight of AI technologies until the truth of utilization and customer demand are unknown. But investors will likely be less patient after seeing the bullish projections from Google Cloud. So Amazon is a wild card for earnings. Obviously, what I want is Amazon to be going down, because I believe in them for long term. They're one of my favorite long-term stocks, even at the current price. I think Amazon is going to be experiencing double-digit growth for the next 5 years at least. So they are one of my favorite stocks in the stock market out of the big tech giants. I want the stock to go lower so that way I could buy more shares for long term. So this week in the stock market, there's definitely lots of things to consider, lots of options to go with. And you definitely want to be on the right side of the market. If you need help being on the right side of the market at all times, click on the link in my description. You could actually see and join the Discord at that link. It's the #1 options trading Discord on the internet. Check it out. It's had over 1,500 success stories, 3,500 total students over the last 5 years. And if you click on success number 10, you could read some of these positive testimonials where people are making thousands of dollars every single day, $3,400, and you can learn from some of these top people in our community. So if you are just looking for a stock market community to be involved with, to be in the loop, we take away that hassle of not knowing when to buy, when to sell, what stock to get into. We do all that for you, all the heavy lifting, and just tell you what ticker symbol, what expiration date, and what strike price to get into. So what are you waiting for? Are you ready to make a little bit of extra cash from the stock market and options trading? Message me, the Daily Stock Market, on Instagram, 201,000 followers, and now 1,023 posts. Thank you guys for making it to the very end of the video, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.